So this is EURUSD on the 3-minute chart. Let me go to the 5-minute chart. Now, this right here is the Asian session. This is an indicator, Asian range indicator on TradingView. If you go to your system, your laptop or your phone, TradingView, if you search for indicators, you're going to find this indicator right here. This particular one is the Asian range indicator. It shows you price movement during the Asian session. So just before the London session is the current session we're in, from 7 a.m. to 2 p.m., right? So, or 1 p.m. So just before the London session is the Asian range. And I told you that London session is usually the session where you find volatility or volume in the market. So during the Asian session, you find out that the market is always ranging, moving in very, very tiny bits. As you can see here, very small candles because there's not much volatility in the market during the Asian session. But once it's London in the morning, you now get to see price begin to move like what has happened right here. So let's start on the higher time frame. Let's look at what the market has been doing. So if you remember, I was saying that, if you remember yesterday, I was saying that I'm anticipating Euro USD to push up to the upside. Why? Because if you go to, let's go to 4 hour, you find out that there's beginning to be a change in the order flow. There's beginning to be a change in how the market is moving. It has been moving like downwards. It has been on a downtrend for long, but now we're beginning to see some like higher lows form. So it's like the market is shifting, it's changing. So I said I was going to expect market to, you can see the change in the direction is beginning to form this base, and the structure is changing, forming higher lows and higher highs instead of this downtrend that we've been having. So that was why I said I was going to be looking forward to buy Euro USD to at least the top here. So, and that was exactly what has happened this morning, even though I was not able to get an entry on the pair. I was not able to get an entry. So this is the liquidity I'm targeting, this particular week right here. Why am I targeting this particular area? Because I know that there are going to be a lot of orders resting here. A lot of orders are going to be resting here. So price will want to come and take out this particular place because there's going to be liquidity resting here. So this is one area I'm looking at. Then this particular high is also an area that we're going to be looking at for price to take out. And right about now, price has already taken out this high. So remember what I told you, that price takes out the high and then will move or change direction. So right now, we can be expecting to see price give us a retracement or a pullback to the downside before it will continue going up. You get, because it has grabbed liquidity here, it has taken out this high. So there are going to be sellers in this market right now, people that have placed their sell limit here or people that are selling here. Why would they be selling here? Because this is a double top. Someone will see this as a double top, you get. Someone will see this as a beginning of formation of an M pattern, and many people have set their sell limits right about here. That's why currently, as price has taken out this high, you begin to see price doing this small like reaction on the high. So yesterday I said that I was expecting Euro USD to buy. Why? Because we are beginning to see a change in the order flow, and then price has taken out this high going to the upside. Then this is just a retracement to test this breakout block. There's what we call a breakout block. A breakout block is I will explain that one to you separately. But then just where there's a break of structure to the upside or to the downside, like in this particular case now, price came and price broke structure to the upside here, right? From this week, right here. So this particular place here is the breakout block. So if you extend, you will extend the break of structure to the right and then anticipate an entry on the breaker. You get, so that is what a breaker block is. You will look for where there was a break of market structure. Once you get to the place, you can then extend it to the right. So when price comes back to that place where it broke structure, then we could see like a reversal. So that is just the concept of breaker block. So when I saw this pullback, I was like, this is likely going to react on this breaker. So we could see it react on this breaker to continue going to the upside because the market is giving us higher lows, right? And that is exactly what happened. It reacted on the breaker and went to the upside. So when I woke up this morning, I came to the chart, I was anticipating to buy, but I didn't want to just buy anyhow. I was looking for confluence. I was looking for like more reasons to make me enter the market for a buy, but I wasn't able to get that buy entry. Now, this was the Asian range here. This is the Asian range. So at around 6 this morning, we got this candle form. This candle formed around 6 in this morning. Then it started pushing to the upside. When this candle was pushing to the upside, I knew that, yeah, we're already seeing buyers in the market. But what I was waiting for, I was waiting for price to come back and take out some liquidity within this Asian range. Then I was going to look for my buy. I didn't want to just buy because you could buy and then price will come back and grab liquidity before going to the upside. So when that happens, you're just going to be like, you're going to get stopped out. So it's best to always wait and see price take out liquidity first. And where did I draw this liquidity? I drew liquidity here. This line, that was my area of liquidity that I drew out. And I was expecting to see price come and take it out first before we push to the upside. But that didn't happen. So I wasn't able to get an entry. So this was where I drew the liquidity. I drew the liquidity here that price will come and take it out, then we'll go to the upside. But price didn't reach here. Price just retraced and came on this particular breaker here. Look, this break of structure, right? So price tested this breaker block and started shooting up. Even at that, I wasn't still going to buy. I was just chilling. I wasn't still willing to buy. I was just chilling. So what I did then was to place my buy limit on this week here. So if price comes back and takes out this week, which is a liquidity, fine, I'll get an entry and I put my stop loss below here. But price didn't come back. It continued flying. So the moment I saw that price was flying like that, what I did was now to also put another buy limit here because this is a flip zone. If we go to the lower time frame, now, you see that this particular here, it's kind of like another block, and it's also a flip zone. A flip zone is a zone that uh, turns from, is more of like a support turns to resistance, or a resistance turns to support. You get? Said, you should understand this particular concept right here, because I said whenever price gets to a resistance and it breaks the resistance, if it breaks the resistance, that resistance will likely turn to support the next time price comes to that resistance. So that was the idea here. Even though I wasn't just using that resistance turn to support, I was using flip zone as the idea. Because flip zone, sometimes when a supply zone, because right here, this is a supply zone on this 5 minutes, right? Because when price was here, it sold. We saw sellers coming into the market. So next time price comes here, we're expecting to see sellers, right? So you can even see that sellers were trying to push the price down. We have a bearish candle here. Then price broke the supply to the upside. So supply will usually turn to a demand. It will flip and turn to a demand because this right now is the exact point where we had a lot of buyers. Instead of sellers, we got to see a lot of buyers that push price to the upside. So I was expecting that, okay, if price comes back to this flip zone, to this supply turn to demand zone, we're likely going to see continuation. So I placed my buy limit again here, but that didn't happen. That didn't happen. Price just continued going up. Price just continued going up. So now, remember yesterday I said I was targeting these equal highs. That this equal highs was the one of the main reasons why I'm looking to buy this market. And you see that today price took out the equal highs. Price has cleared this equal high, this liquidity. It has cleared this high. So right now, What I'm expecting to see on this pair is this. We could see the pair come back down, come and take out all of this liquidity here before it will continue to the upside. So this is what we're likely going to see on this pair. It's either this happens or this happens. It will just come up here, clear this extreme high before it comes back down. Sorry. So this is what is likely to happen. And I'm more on this particular scenario, this one here. I'm more on this particular scenario. I feel because price has taken out this equal highs here, also taking out this extreme high here, we're likely to see a reversal. Price has already grabbed all of this liquidity here. So we're likely going to see this. It will sell off and come and take out all of this internal liquidity down here. That's what we're likely going to see before it continues moving to the upside. So that is what we're likely going to see now. If this doesn't happen, because the London session is already dying out, so we could get to see this reverse back here. Then during New York session, which is going to be from 2, price will now continue the bullish move. We could get to see this. So right now, once I see price changes character to the downside, once I see price come and take out this wick, once I see price break this line to the downside, I'm going to look for sales. Just mark this thing, this particular horizontal line I've drawn. Once this price comes and breaks out this horizontal line bar, we're looking for sales on Euro USD. We're going to sell Euro USD to at least, let me take out this. We're going to sell it to at least this breaker block here or targeting this liquidity here. That is what we're going to do. Once Euro USD breaks this line to the downside, we're looking for sales. And as you can see, it's already pushing down hard. So once it breaks to the downside, we're looking for sales. So Forex, you're not 100% sure of anything. You place your trade, manage your risks, and then allow it to play out. If it stops you out, fine. You lose 0.5% or 1% of your account. But if you have a good risk to reward ratio, you're always going to come out on top. You're always going to come out on top. So another thing that can happen is that I said this price can come up here to clear this horizontal line I drew before it comes down. So it's possible we can even see this scenario, this one. It's very possible. But I'm more towards this other scenario. This one, I'm more towards this. I feel price will come. Let me draw it properly. I feel this break this place, then come and do a retest, then it will come down here before it will come back up. We're likely going to see something like this. So if this happens, fine, we can get into the trade. Can get in the trade around here. Now, let me show you something. Whenever you're trading Euro USD, there's a pair they call the dollar strength index. It's actually measuring the strength of the dollar against like 5 other currencies. So it's called the DXY, the dollar strength index. Now, the dollar strength index is inversely correlated to Euro USD. What that means is that if Euro USD is going up, dollar strength index, DXY is going down. If DXY is going down, Euro USD is going up. They are inversely correlated. They always do the opposite. So it's good, it's very important that you always check or cross-check or um, reference your analysis on Euro USD to DXY, because sometimes DXY will give you a clearer picture of what you could expect on Euro USD. So let's go to DXY right now so that we see what is going on DXY. Now this is DXY. As you can see, DXY is exactly opposite of what Euro USD is doing. Now let's go to this is 15 minutes, right? You see that the candle on DXY is going bullish right here. If we go to Euro USD, you see that it's bearish. You see that Euro USD is bearish. So if you look at it well, you can check it on your own phone or your device. You see that it's inversely proportional to Euro USD. It's doing the direct opposite of what Euro USD is doing. So some of the time, this will help give you a clue of what you should anticipate, of what you should anticipate. Now, check out something. I won't say I'm very sure because nothing is 100% certain. Anything could happen in the market. It's always advisable that you're open-minded and very adaptive to whatever you see. So now there is an equal high. I'm going to further explain liquidity in in today's class because today is the last day of the bootcamp. So I'll further explain liquidity, tell you the different types of liquidity that is in the market. Now, there is a type of liquidity that is called equal highs or equal lows. That was exactly what I saw on Euro USD that made me know that Euro USD was going to buy today to take out the liquidity, that the equal high that was here. You get this equal high here was what was making me feel that, okay, Euro USD was going to buy to take out this equal high, because I understand that whenever there's an equal high here, it is a liquidity that market will want to come and take out. So liquidity always magnets price. Liquidity always draws market to it. Now, there's another equal high that I'm seeing, that I saw on DXY. And that is why I believe that DXY is going to go up. That's why I believe that DXY is going to go up to take out this equal high at least. To take out this equal high at least before it continues moving to the downside. Before it continues moving to the downside. So now the DXY has cleared this liquidity right here. That's taken out this low. That's grabbed liquidity, right? So what do we expect? We're expecting that as it has grabbed this liquidity, it should buy, it should push up, because it has taken out a lot of stop losses, a lot of take profits, that's taken out a lot of orders that will be able to feed it to buy to the upside. So what then is the next thing that is making me believe that this is going to buy? Let's go to the 5 minutes. You're going to see the liquidity clearer, the equal high clearer. Now, there's a very, very clean equal high right about here, which is liquidity that is going to magnet or draw price to take out. So by the end of today, we're likely going to see DXY come back to this equal high here and take it out. Take it out. And of course, it is liquidity, it is internal liquidity, and it doesn't mean that market will continue to buy, but likely we're going to see market take it out, then continue to sell. Because if you check it out very well, today, DXY did not really take out any internal liquidity within this Asian range. Because most of the time, whenever there's Asian range like this, price will come down and then go back and clear Asian range liquidity, internal liquidity within the Asian range, or take out the Asian high before it will continue in its direction. So this didn't really take out any Asian range liquidity. It didn't take out any internal liquidity. In fact, what it did was to just come and form extra liquidity. It just came and form more liquidity by giving us a very, very sharp, equal high right about here. Very, very sharp equal high here. Then it sold off. So what I'm expecting is for price to come and take out this equal high before it goes down. So if this is going to happen on the DXY, then you should expect that the direct opposite should be what will happen on Euro USD. So if we're expecting DXY to buy, that means Euro USD should sell. That means Euro USD to sell to at least this point like this, because this is where the equal high was on the DXY. So I'm expecting it to come to somewhere here. So let me delete this first of all, and then we'll wait to see. So I don't know if this is clear. I don't know if you understand what I've explained. Saeed,
So,
do you understand what I explained?
yes, sir.
Or should I explain anything more? Do you have any question?
No, sir.
All right. We have Rohit. Rohit, do you understand what I explained, or do you have any question? Rohit, are you there? Okay, he says he understands. All right, that's good. That's cool. That's cool. So let's just chill out and see what the market does. See what the market does, and we follow it. So if we get to see this play out, I'm going to send the signal, the entry price, and all of that. Then we're going to take the trade. So it's the best times to take your trade on any pair, in fact, is whenever market has taken out liquidity. So if this market breaks this structure to the downside, we are going to take our trade and place our stop loss up here on this week here, because this is going to be a protected high that market will hardly come back to take out. If market comes and takes out this high, then it's invalidated, you get. But then usually it will not come and take out this high again, because this is the high that took out liquidity. So let's just see how it goes. If we get to see price push to the downside here, break this demand, fill this demand, because remember I said demand is where you got to see a lot of buyers. So there is a small demand on this 5 minutes here, a small demand, and at the same time an order block. See the last bearish candle before the bullish move, we got to see a lot of buyers here. So this is the demand, this is another block. So if price fills it, that means sellers are in control. That means the supply is the one in control of the market. So once we see price fill this area, breaks to the downside, we'll just look for a retracement, a retest, then we sell it to this place right here. So let's see how it goes. I'll update you guys on the channel when we get an entry. So that's all for today. That's all for today. Then before we close, before we end the meeting, let's look at the fundamental part of things for the week. Remember, I said Forex Factory is where you get to go and check out the news, the fundamental events for the week, the economic calendar for the week. So today, this week is actually a very, very busy week, a week filled with a lot of economic events. So I'm going to be teaching you guys more on all of these things. Tomorrow is CPI, then on Wednesday is FOMC, and then in fact every other day of the week there's like a red event. As you can see, the calendar is filled with red events. So whenever you see a red event like this, the color red means high impact events. That means there's going to be high impact on the market. The market is going to experience high volatility because of these events. So tomorrow is CPI, Consumer Price Index. Tomorrow is FOMC, where they decide the interest rate. And then we have unemployment claims on Thursday. On Friday, we have consumer sentiment. So all of these are going to affect the market. And in fact, it's going to be like the major driver of the market. Fundamentals are like the major indicators of where the market is going to be heading to. So most of the financial institutions, most of the big players in the industry, in the market, are on the sidelines, in fact, waiting to see what all of these fundamental events will say, waiting to see the result of these things, then they take their positions. So the result of the FOMC, the interest rate, the CPI, first of all, CPI, what is, if CPI is like the index that shows what inflation is what is like the most important metric that determines the rate of inflation in America. So once we get to see a high CPI, that means inflation is going to be high, or inflation is high. And then FOMC, it's the Fed that will take interest rate decision. So CPI is going to influence what interest rate decision will be on Wednesday. And all of these things are like the key, most important fundamental metric that is used to determine the general flow of the market, because that's what the big traders used to trade. They don't just randomly trade off other block, this one, that one. No, they actually use all of these fundamental events to make their trading decisions. So this week is going to be like a decision week. So we'll be careful. We'll not take trades anyhow. We just chill, see what these events are, see the data that is released, then we trade accordingly. So having said that, I guess that's all for today. So hope this was useful. Hope this was impactful. Hope you got value from this. Please, I will post the video on YouTube. Kindly give it a thumbs up, just like, and if you've not subscribed to my YouTube yet, please give me a subscribe. Hit the subscribe button. Also, you could follow me on IG. This is my IG handle right here. Alpha_blue_FX. So cheers, guys. See you guys in the next one.